Our money morning show. What's up, Andrew?
Good morning. Good morning.
All right, let's get right into this. I was asked to talk about interest rates because very recently the U.S. just increased the lending rate. Canada's held firm as of their last meeting. Let me throw this up on the screen to sort of frame it, and then we'll talk about this request this poster has here. Let's see here. Window. Canada Prime overnight rate. So there you go. So this is what it's looked like over the years. I don't know if you ever remember Andrew Dad talking about the 1980s when the interest rates were like 20%.
Yeah, I remember that.
They peaked around the early 80s, looks like August 1981. Bank of Canada overnight rate was 20.78%. Prime was 22.75%. I remember him saying that house in Markham that we had over by Ninth Line was like basically underwater. But anyway, so this is where we've gone since then. In the mortgage crisis around 2008, they dropped basically down to nothing. And I think you're going to see rates drop fairly soon in the next 12 months. I would say you're starting to see them on the decline here anyway. But this is where we're at. Prime rate 6.7. Bank of Canada overnight rate is 4.5, and they held that as of the last meeting. So let's pull that out of the screen just for frame on that issue. And here, I'll read this request over here in Personal Finance of Reddit. It says interest rates may have put a home out of reach for now. Where to go from here? The post says income is $35,000 a year. Household is me and my disabled wife, no kids, $40,000 in savings, absolutely no debt. We own a 1967 mobile home that probably isn't worth 5 figures. Lot rent is $550. I'm assuming that's monthly. We own our 2007 vehicle outright and may only have a couple years left. We're lucky 6% of my income is going to my 401k. This is obviously a U.S. request now. The plan for this year was to buy a home. How old is this couple? Doesn't say. We've been accepted into a land trust program that allows low-income people like ourselves to get into the housing market by selling homes at a reduced price. Have you heard about this new program that they're launching here where you don't have to have a minimum down payment? The lender takes an equity stake in the home.
No, I haven't. I've heard of government programs in certain provinces where they encourage people to buy in remote areas to drive the economy in smaller populated areas. I've heard of that.
Yeah. Apparently I don't know if it's launched just yet, but apparently they're like, you won't need the minimum 20% down, whatever it happens to be. They'll basically let you buy a house with almost nothing down, and the lender takes an equity stake in the house as long as they like the market conditions and they think that it's going to go up in the future. It would seem like their legal team would have taken a very close look at it for them to even consider this because of the risks that banks take. But I would imagine the costs of borrowing on something like that would be ridiculous. I mean, maybe we'll dive into that in another one. But anyway, plans to buy a house later on this year and land trust program, low-income people, blah, blah, blah. When you sell the house, you sell it at a reduced price to pay it forward. Okay, so this is some low-income housing plan they're talking about. However, with a sharp raise in interest rates, even these homes are barely within our budget. So for now, we're staying put and continue to save while I work on becoming a citizen, currently a legal resident. Okay, done. Mortgage, we've been approved for a loan. $123,000 at 7.3%. Holy shit. Who would borrow at that rate? What is the current rate right now if you go to like a big 5 bank here? What is their posted rate? Do you know?
Yeah, I think it's like 6.5 for a standard 5-year term.
I don't even know if I would borrow at that rate. That sounds kind of mental. Keeping the total monthly payment below $1,100 with taxes and insurance, and they also have longer terms, I think, in the U.S., and you can write off your mortgage interest down there, which is beneficial, something you can't do here. In the meantime, I don't know what to do. The money's sat earning $100 a month, so they got no residual cash flow. If you use 10 to 15.
They've been able to build up a down payment. He did mention in that post that he's got $40,000 in savings, which is pretty phenomenal considering the circumstances he's mentioned in his post. So
yeah, the house price is like $150,000. I don't know where they live, but it's got to be somewhere. It's definitely outside of a big city.
Yeah.
But so this is a concern for a lot of people today. The mortgage lending rates are what they think are high aren't that high. If you go back to 1981, according to that chart that I showed earlier, what would your recommendation be to people who are looking or want to get into the housing market and have concerns about rates?
Well, that's certainly tricky. Personally, the way I feel about it is, if you're looking to purchase a house with a mortgage of around 100,000, like this instance in this posting from Reddit, the amount of interest that you're paying on that is going to be much smaller because the mortgage amount is smaller. So the smaller the amount of the mortgage you're borrowing, the less interest you're going to pay on it. Here in Canada, and especially in the Greater Toronto area, where house prices have rocketed year on year for quite some time, until the most recent couple of years post COVID, houses, I think the average house price in the Greater Toronto area is like $1 million. So
Let me see if I can pull that up right now while you're talking.
So if the property value is just assume it's $1 million here in the Greater Toronto area, your mortgage is going to be close to $1 million. And if you have a mortgage close to $1 million at 6%, your interest is going to be astronomical. You're going to pay a lot of interest on a mortgage of $1 million, but you're going to pay a fraction of it if you have a mortgage of 100,000. So using that logic, I would say for someone looking to purchase a house with a $100,000 mortgage, the interest rate is not going to be that significantly different if you buy a house now at 7% interest, or if you buy it when it's back down to 4% interest. However, on the flip side, it will be greatly significantly more if you're buying a house at $1 million. So you got to take that in consideration on how much extra interest you're going to pay based on the actual mortgage balance that you've got on the purchase of the house.
All right, I found a chart here. This is more relevant to our Canadian viewers who are on this stream. So let's throw that up real quick. Average housing price it peaked 2022, just towards the end of the scamdemic, just over 3 mil.
Where's that for?
This is Toronto Regional Real Estate Board. It's the largest market in Canada, so it's going to be the leading indicator anyway. The prices are trending down though right now, I think you're going to see safely for at least the next 12 months. So if you're looking to get into the market, there's going to be a bit of a window that's opening. These windows here, they don't seem to last very long. Like here's a very small window. I don't know if you guys can see my cursor. There's a very small window there, one here. And by the looks of this curve, we're probably near the top of that opportunity. But prices did peak about 1.3. They went down to about $1 million. They've started to climb up again. So it looks like they're on the ascent. What do you think about housing overall as a good place to put money? Because people are still drunk on the idea of buying a home. Do you think it's a good place to invest your money? You still have the capital gains exemption on your principal residence here, which is good, but yeah, I think they're going to take that away, or parts of that away.
Personally, I like the idea of property ownership, and it all depends on what you've seen in growth of your property value. Mm-hmm. If you live in an area where your property values do increase year on year, it's a good idea to get in the market, because you're going to get.
Well, this chart's a strong indicator of that. Like this is what people, it's the whole like you're going to miss out sort of thing, right?
Not only are you going to miss out, but you're going to miss out on the equity growth you're going to get in the property. You buy a house for $400,000. If it goes up to $800,000, you just made $400,000 of equity in the property. Yeah. So it all depends on where you live. If you live in an area where you see very minimal growth or no growth at all, a house sold 15 years ago for the same amount that you just bought it for, then realistically speaking, there's no essential need to buy into a property, because you're not going to be seeing growth in the value over a 15-year period when you potentially might look to sell and retire or downsize. So it all depends on where you live. Personally, I like the idea of owning the property, so that way I just don't give money out to a landlord. Mm. But it all, like I said, it's all retrospect and relevant to where you are and what the values are and how much equity growth you might see in your property. Like I said, in the area that I'm currently living in, we've seen growth. And if I choose to retire in 10, 15, 20 years, then hopefully that equity growth that I've made and continue to hopefully make will be helpful to my bottom line, rather than if I was living in an area where it was very rural and the property values haven't changed at all.
Yeah, I co-sign pretty much all of that. I'm just going to add to this. Look, if you can afford to get into the housing market, and it looks like there's a small opportunity right now where it's taken a bit of a pause. I know a few guys that invest in Toronto real estate with rental properties that they like, and their leading indicators are basically saying buy, right? if you think this is a good opportunity and the prices have sort of cooled down for a little bit, get in. The banks here don't usually let you get in if you can't afford it, unless you might deal with a private lender. Even then, you might be getting yourself in a situation that's going to get a little sticky. But from the principal residence aspect, I'd say yes, because the capital gains on it are tax-free right now. I think the government's going to change that because they're always looking for new ways to milk tax revenue from people that do the work and put their hard-earned money at risk to make more money. So I believe at some point in the near future, they're going to start to erode the amount of capital gains exemption that you're going to be allowed to take out of your principal residence over time, because that's just the trend that I see. So I'm not a big fan of rental properties here. I don't think that they're a great investment. There's other places you can diversify extra income if you've already acquired a principal residence. The ratios just don't look good. The ratios look a lot better in the States. You can get up to 1% of the property value monthly. You're lucky if you can get like a 10th or a 20th of a percent of the property value monthly in rental income. And those seem to be the strong indicators of a good market. So as far as what you guys are doing in the States, if you're watching from the United States right now, I'll let you do your own research. But as far as the Canadian market goes, yeah, I mean, the interest rates are holding steady. And because the prices look like they're going up, I think you're going to start to see the interest rates move, but not very much. It's difficult to say. Nobody has a crystal ball, but this is the reality of the world that we live in, man. You know, stuff is expensive. Cars are expensive. Housing is expensive. You know, but this is how the government runs our country, right? You know, like these prices have accelerated exponentially over the last couple of years. And it doesn't look like there's going to be much of a window as far as housing goes here anyway. I don't know what's going to happen in the States, but a few guys that I've talked to seem to still like the market, and they're looking for good opportunities to acquire more doors, especially in markets where they're confident that the government's going to cover the cost of housing for them if the people don't, just the way they've got it set up. Anyway, what else is going on with you today, man? There's a coronation happening right now in the good old UK.
Yeah, certainly is. I think it's done now. It started at 4 a.m. Eastern time, so that was a little too early for my liking.
Yeah.
If there's any highlights on later in the day, I might check some out to see how that went. It's obviously a monumental day there in the UK for the monarchy and for the people, and obviously being a sovereign state, Canada being, you know, part of the British Commonwealth, it's relevant to us here as well. But yeah, I'm just going to add about the property ownership. Landlords here in Canada have a lot of regulation and legislation they have to adhere to in terms of the property that they own and the property that they're renting out to a tenant. So it's extremely complicated and can be extremely costly to own a second property that you use as a rental property here in Canada. You got to take that in consideration. You need to make sure that your tenant is extremely good in terms of keeping the place clean and tidy with no damage, and also makes their payment on time, because if they are not doing those things, it is extremely difficult to evict here in Canada. So you got to take that in consideration as well. If you're looking to buy a second property as a rental property for income, depending on where it is and location of the property for the equity growth down the road, you also need to take consideration if you're a landlord, you got strict rules and regulations you have to adhere to.
Yeah. You're here. So let's get the sign off done on this one. Mike, thanks for the super chat. I understand that you appreciate the content that we're putting out. That's awesome. If you're looking at getting into buying assets or housing, for example, and you've got credit card debt, this is the ticker below that you want to check out. If you've got more than $15,000 of unsecured credit card debt, you can check out totaldebtfreedom.ca. That's now Andrew's wheelhouse. We'll be on again as many Saturdays as we possibly can. I'm going to be away next Saturday, so I won't be able to make a show up, but we'll be back the one after. Again, thanks for watching, and you guys have a great weekend.